When families are considering homes in Dubai, there's three aspects that they're mainly looking at. They're looking at the size, they're looking at the location, and they're looking at the price. Everyone wants the biggest size in the best location at the lowest price. But in reality, you're going to have to compromise on at least one of these. Most people coming to Dubai right now are looking at the same master communities. Dubai Hills, Emirates Living, Arabian ranches. They're great communities, but prices are trading at all-time highs. Prices have increased due to insane end user demand and constricted supply available on the market. What I want to talk about today is where the next version of these communities are emerging and why that matters if you're buying or investing. So if you're an investor interested in identifying the next growth corridor here in Dubai, or if you're an end user looking for your next family home, this is a video you don't want to miss. Emirates Living is one of Emaar's most successful master communities that they've ever built. Record-breaking transactions across the Springs and Emirates Hills. It's the perfect case study to suggest why there is going to be an Emirates Living 2.0 in this new growth corridor of Dubai South. And so when I look at the Oasis, Polo and The Heights, I look at a new triangle of communities that is forming that is going to be the next Emirates Living 2.0. If you're making an investment into the Dubai market right now, there's a few questions you need to ask yourself if you want to make a good investment. You need to consider, what is your entry price? What is your target exit price? Who is your target audience? And why would they be willing to pay you a premium in the resale market? So what is the price that we're entering at? So the price per square foot on average across these three communities is between 1,800 to 2,000 dirham a square foot. And this is the absolute price floor. And when we consider why is the price floor, it's because Emaar were the first movers into this piece of land, okay? They are the first ones to develop communities in and around this barren piece of land, and that's why they set the pricing. The truth is, Emaar would have acquired this land parcel many years back. So for a private developer to now come in, they are going to be pricing their communities at a much higher price point. And so when we understand that we're buying into the absolute price floor, we then need to understand where is the price ceiling. So to do this, we need to look at the transactions happening on the secondary market. If we look at, for example, other established Emaar communities, say for example, we have the Meadows in Emirates Living, a 4-bedroom villa here, you're not going to get anything less than say 2,800 to 3,000 dirham a square foot. Sidras have been rising incredibly well in price over the last year. A 3-bedroom villa in Sidra is going to cost you around 3,000 dirham a square foot. You're almost at 8.5 million dirhams. If we look at Gulf Place, a slightly more luxury offering for a 5-bedroom villa in Dubai Hills, you're going to be looking at say 4,000 to 4,500 dirham a square foot. So when we then consider the pricing at say 1,800 to 2,000 dirham a square foot, it's a very attractive opportunity to enter the market. So when we understand the transactions happening on the resale market, it shows us that there is an appetite for people to pay these premium prices. And to be honest with you, a large part of that is because there is extreme limited supply of villas and townhouses in the market. So considering there's not a huge amount of supply and obviously demand is increasing because of the wealth migration happening around the world, prices are only going to end up getting squeezed. And that's exactly what we're seeing in these legacy communities that have been developed by Emaar. It's what we now need to do is we need to understand what is the next emerging community where we can see significant gains, and we need to understand why the fundamentals behind them are going to be so strong. Because as we progress to 2028, 2029, there is going to be more townhouse and villa supply, but ultimately it's going to be the fundamentals behind these communities which is going to drive demand. So now we understand where pricing is at and what it could potentially reach. We now need to understand who is our target audience and why would they be willing to pay you a premium on handover. And to do this, we need to understand what demand anchors are going to ultimately drive end users to settle in these communities. So firstly, you've got JAFZA, which is Jebel Ali Free Zone, which is an economic free zone in Dubai where foreign investors hold 100% ownership of their business and can benefit from tax exemptions. There are over 11,000 businesses operating out of JAFZA, and it's played an incredible role in the growth of Dubai's economy as the infrastructure connects businesses to over 3.5 billion consumers. To put that into perspective, JAFZA has attracted more than 30 billion in foreign direct investment and has created over 1 million jobs. You also have the master plan for Expo City, which is at the forefront of sustainability and technology, and it's another free zone which is the cornerstone of the 2040 master plan set out by the Dubai government. It's going to play a pivotal role in the economic growth of the future of Dubai, part of the 2033 economic agenda. So Jebel Ali Free Zone and Expo City are going to be playing, and already are playing, a key role in Dubai's economic growth story. So this is exactly why they are going to be the demand anchors. So job growth in these two economic free zones at manager and C-suite level are the exact target audience that's going to drive the demand for housing in nearby communities. And that's why Oasis, Grand Polo and Heights is very well positioned to capitalize on this demand. So the second factor that's going to ultimately drive demand to this area is the infrastructure development happening in Dubai South. And I'm not talking about the Al Maktoum Airport. I think it's unreasonable to say that the Al Maktoum Airport is going to drive prices in the long run, especially for these villa and townhouses communities. But what I am referring to is road development, but more importantly, the Etihad Rail. Because as we know, traffic is a big issue in Dubai right now. Families and end users who want to get away from, say, the more established communities in the bow tie of Dubai are going to be looking at areas where traffic is not so much of an issue. And if we look at these communities in this new growth corridor, we can see that very good road connectivity, but the government are investing more money into the road expansion. For example, we've got the Al Fai road extension, which is going to be an extension onto Al Khail Road. And from another perspective, we've got Etihad Rail coming up. And Etihad Rail is going to enable a bullet train for all of the Emirates, connecting them all together. Another aspect of the infrastructure development is the introduction of more schools. So a big issue that we're facing in Dubai right now is a lot of the schools are oversubscribed. And part of the Education 33 strategy, we're seeing more schools being introduced, and really big brands, by the way. So we're seeing the introduction of the likes of Harrow and Queen Elizabeth, which are big brands in the UK. And these are schools that are going to be in close proximity to these emerging Emaar communities. So not only are you going to benefit from the world-class schools that Emaar provide in their communities, but you're also going to benefit from schools around the area. So now we've understood who's going to be buying these houses and why they're going to be paying us a premium. It's because there's a need for housing in these areas, because there's not a lot of choice available in and around these economic free zones. Emaar has the brand, it's going to carry brand value, it's going to be a place and a community where people are going to want to live. And when we then consider the infrastructure development happening in and around the community, whether that's transport and the integrated road structures, this is ultimately going to change the behavioral patterns for end users to wanting to shift to the new and emerging communities. And that's why it's so important when you're making an investment, you need to understand what are the real buyer considerations. You know, most people looking at a villa or a townhouse, they're going to be considering three things: the size, the price, and the location. And they're going to be basing the location on where they live and where their children go to school. And so they need to find a good equilibrium in somewhere where it provides good size, close to their workplaces and schools, but also at a good price point. And these emerging Emaar communities, they blend a good combination of all of those things. As an investor, to make smarter investment decisions, we need to understand the pain points that end users are currently facing. And that is in traffic, the fact that schools are oversubscribed. And nowadays, developers are launching houses where the built-up area are bigger than your plot sizes. So not so much favorable sizes, and therefore your floor to area ratios are not so appealing. And so with the emerging corridor with Oasis, Grand Polo and The Heights, we can see these problems being tackled head on. We're seeing better sizes at a better price point, and we're seeing more and more schools coming up in and around these areas, and we're seeing better road infrastructure in this growth corridor, as opposed to the bow tie of Dubai, where all of the established villa and townhouse communities are. I hope you've enjoyed the video. This gives you a bit of an understanding of how we think about investment opportunities here in Dubai. We see this growth corridor trading at a discounted rate as opposed to what the ready market is trading at. We see a good opportunity for community appreciation to happen because the community hasn't even been built yet. We also see the timing element of it, right? We have the first mover advantage element of investing into a master community to gain maximum capital rental appreciation, but then we're also aligning our investment decisions with government spending. So we've taken this framework, applied it to this new growth corridor in Dubai South, but this is just an overview and there's a lot more detail to go into. So if you're interested in getting a report in any of these communities and understanding any of the product offerings, please do get in touch with the contact details down below. And if not, I hope you found some value in this video, and I'll see you on the next one.